Hello guys, and glad to have you on board again. Today, switching up from the regular weekly updates we've made, we're going to go into some more fun territory and do things that I like to do a little once in a while, diving into some comparison chart, kind of forecasting the future. Of course, no one knows and no one ever has viably predicted the future, so I don't intend to have such a power. Though, without further ado, we're going to go dive straight into this thing. If you remember, we've done quite a few weeks ago a comparison of the global crypto markets, trying to compare it to what I had in store as to be the closest comparable thing to. We've used the NASDAQ because, of course, we took the NASDAQ as a reference bulk, a representation of the asset attraction, okay, kind of the global cryptocurrency market comparison, though we didn't use a company type. Like we weren't looking at the Apples, the Microsofts, and all of the Yahoos and all of the things that died in between the world we have back then, the revolutionary, money attractive stuff, and the world we live in today, because this bubble back then was the dreams about the world we could potentially live in today. And of course, the world we live in today is not that different from what were sold back then. It's just that some competitors died, some others took advantage, some survived, some didn't, and that's exactly what I think about the forecast for cryptocurrencies. There's definitely way of a competition today. Definitely most of these guys will just die. Okay, so that's what we've done the last time, just to keep it up and just to update it a bit. We're definitely on track. Just the structures are different, of course, because they always have to. So the intermediate block in which we're into, we're supposed to break resistances and then break supports. Okay, break a resistance and then break a support. We've had quite the same in here. We kind of failed to break a resistance actually, but we've gone right up to it. And then now we've broken the support and we're pretty much terminating the same temporary cycle for it. So hard to say that we're going to recover just as of right now, but I still tend to believe that we're pretty much at the end of the consolidation rather than the beginning. Could be a final flush, of course, so don't get me wrong with this, but I still expect that we're pretty much nearing the end of it rather than the beginning. So what might be coming next is a huge upside move, just like we had back then. I still believe that what we're experiencing right now is huge FUD and negative behavior and negative bias over the cryptocurrency market, which feels to me like just a stress test. We're basically stress testing people tradable perspectives, and oh, sorry about that. So I think that's what we're having now. So if this stress test situation is successfully passed, then I think, yeah, kind of a rapid growth cycle might emerge. That's what we've had back then. We've made the forecast, so we're pretty much on track with it. What we're going to do today is add up to this, just like, of course, we've looked at the broad market perspectives, kind of the entire money that was poured into the tech sector back then, just like now we were looking at the crypto total, all of the coins combined. Today, we're going to just zoom in a little bit and comparing two assets themselves who were part of the bubble. Of course, we're going to take the big names in here and we're going to compare Apple with, of course, I had a bit of a trouble trying to figure out which asset to compare it to, because of course that would be something some people might agree with, some people might be disagreeing with. So let's just not try to go down this road, okay? I've chosen Ethereum not because Ethereum is next Apple, okay? Just to let you figure out that this is among the potential candidates, and there was some of them. I thought definitely ETH was the one to go for, and secondly, most importantly actually, price comparison of the structures of these prices and so on are by far the most accurate ones I've found. So let's go and start comparing these things. Remember that anyhow and anyway, things replicate, but definitely not with the same structural prices and definitely not with the same amplitudes and timings, okay? Time and amplitude, kind of the X and Y variables, always change. It's just that the patterns, okay, the way things orchestrate all together, that tend to replicate. Things like the same old song, but with a different tempo and a different pitch, but it definitely rhymes, okay? So that's definitely all about it. So as of Apple and Ethereum in here, we can definitely see that what's been preceding the bubble phase is basically, well, trying to figure out a stable price, trying to define some kind of a broad asset valuation on the early stages of both of these companies, if we can compare Ethereum to be such a thing. So afterwards, of course, comes the mania phase in which prices rapidly surge. This is where we forecast how crazy and how great this company could be in the future forward. That's definitely exactly what we've experienced with the 2018 bubble for Ethereum. It was a game changer. It was all about it. It was definitely the thing to be into. Of course, comes out with a crash afterwards, huge and long and painful deteriorations of prices, but still, the company is still at work. It's still producing stuff. It's still progressing. It's still getting better, and so on. Then comes the reactivation phase. That's exactly what we're seeing. What I like is the similarity on the patterns in the fact that when we retrace the all-time highs, as you can see, what below it, we see a bit of an hesitation, okay, kind of this, exactly the same thing in here, choppy price action. Then we succeed, of course, breaking all-time highs, and as we do, brings in a bit of a speculation that causes another volatile pop. That's exactly what we've had in here. Okay, hesitating, succeeding, popping, and validating the previous all-time high as a support. Okay, then what I like is we can see another intermediate choppy action, and then boom, the massive blow off top phase. Well, exactly, as you can see, each and every in-between structure has been respected very, very much similarly. Amplitudes and timings vary, okay, but still the structure and patterns are definitely there. Then comes a huge drop. It has been different way of doing things because it's been done in two sets of ways for the Nasdaq, for Apple, which seems to have been done in a single straight line for Ethereum. Still, the areas that have been retraced are exactly the same. We've gone right up to this intermediate choppy action. That's exactly where Apple stopped its bottom. Of course, we had a bit of an extended downside move for Ethereum in here because of the flash crash we've experienced into cryptocurrencies. So that being said, here we are on the supportive area, and let's start playing my favorite game, going into future forecasting territory. Of course, another big warning ahead. That doesn't mean things will happen that way. That certainly doesn't mean anything. That just means that this is my plan. And what I like is that I have a mindset projection of things I think are the most probable to come. And I actually have been absolutely staggered by the comparison I had from Apple's forecasting. Basically, what happened to Apple afterwards is pretty much exactly what I think is on the verge to come for Ethereum. And like I said, both time and amplitude will likely vary, but the next things to come for Apple, if I put them pretty much one-to-one compared to current Ethereum prices, are definitely my current forecast for Ethereum. So let's play it that way, so you'll have a much clearer vision of what I think is on the verge to come for Ethereum. Then, of course, recovery comes in. It goes pretty fast. It goes to the third range boundary area. This one was built with an ABC structure, so it was easy to forecast. I think for Ethereum, it's pretty much going to be 3,300 or so. Okay. Then, of course, we hesitate a bit, kind of a broad short-term range, I think, for the crypto market, and then we break through it. What I like is then the third range boundary is broken through. It's not even validated. It's just sideways, flat hesitation before pushing further. Okay, kind of a bit of an hesitation again, and bang, back to all-time highs. And yet again, people over-speculate, which causes another drop. We retrace down to all-time highs and then succeed to get through it. Bit of a choppy activity, but we once again validate new all-time highs assessment. And here comes the next move. As you can see, same pattern replicating over and over again, kind of an intermediate choppy stuff, and comes the final blow off top. Bang. Blow off top, vertical price action, that this is the future, overblown, and bang, comes another consolidation structure. Two sets of waves again for Apple. Okay, that's basically the 2008 crashing structure. So broad market conditions were deteriorating. Okay, the stock market was going down. And of course, big companies, Apple included, did as well. So huge consolidation down the road. Same two sets of waves comparison. Okay, so hard to say if we're going to get such a thing, but this is yet another 60% drop to come for Ethereum. So this one for Ethereum is a comparable stuff, okay? 47% when we had back then for Apple was pretty much similarly the same thing. Let me just grab it. Okay, that's pretty much, yeah. Apple back then has been losing 42%. Okay, 42, 47, comparable stuff. So expect Ethereums to drop by 60% when we terminate these current crypto cycle. Just like when the bubble popped into 2008, Apple was along the ones to fall for it. Okay, Ethereum will fall as well. So if we take and replicate current speculated amplitudes and timings, that will give us something like, compared to the current times, okay, it's double the time we've had previously. So I would say going forward from September to June, July, that would be up to an additional year at best. So I would say mid-2022 to eventually late 2022 to terminate the current cycle. If we do such a thing, okay, we will probably see the same intermediate structure, blow off top, and of course, consolidation comes on afterwards. So expect of it that way. If we now try to project amplitudes, that would give us something like $9,000 for Ethereum, approximately $9,000 to $10,000. Market-like psychological level, so I think we're going to get closer to 10,000 without necessarily getting to break through this. Okay, so these are targets I have in mind for my personal Ethereum risk management forward. That doesn't mean I'm going to sell them there. I'm probably going to cover the portfolio because we're going to go into forecasting ahead. Of course, in here, probabilities to get to rhyme with the patterns on Apple definitely goes way below my personal standards. So I'm definitely not going to trade any such a thing. I would just be happy enough if we were doing what I forecasted so far. But just for the sake of playing with these games, let's see what happened with Apple afterwards. Quite again, fast recovery. I mean, it's just half a year, it was right back to historical highs. Pushed further. Okay. All-time highs, same old patterns again. Anytime we all-time high, there's a bit of a volatility move, and then we validate, we push forward. We already nearly doubled the price of the previous all-time highs of the 2008 crash. Prices keep rising, very little consolidation. Bam! Blow off top. Another consolidation is on the verge to come, of course, and here it is. Okay, yet another huge drop. Okay, so anytime it overblow off top, there is a huge consolidation afterwards. But still, as you can see, you know Apple has its downside moves recently, but you also know the old picture. $25 by far below the current prices we're having now. So you know this is not the whole story. Okay, so this is what it is. It goes down at some point, but it always recovers and it goes way, way higher. Because anyhow and anyway, people just want to be part of it and they just want to be part of the things. Just like I think Ethereum is a network which people will want to be part of. Not because they just use it, but they want to be part of it. And there are some staggering similarities, by the way, as we keep on pushing forward. Okay, think of it that way. Do you remember the first days of Apple? I personally had these personal critics over the project. The fact that Apple's products were definitely much more expensive than the competitors without necessarily justifying better performances and stuff like that. So I had some critics, even though I personally had lots of Apple stuff back then and still have some today. So that's exactly what happens, I think, for Ethereum nowadays. Things can compare to the fact that is Ethereum the cheapest blockchain? Definitely not. We had a hell of a clutter recently, fees exploding and so on. Still, has it pushed people away? Sure, certain people have gone for the competition. Some others just stayed there. And that's what I like. This is exactly the same thing that we've seen with the Apple's hype back then. Developers, which are the one who makes the magic happen, they always have been far more productive into iOS than they were into competitive, cheaper, and sometimes even more effective products. So in this perspective, I think that Ethereum's grip on the crypto market today is definitely not on the verge to terminate. I think it's more on the verge to be quite similar to Apple's history. Of course, future never replicates. Like I said, it rhymes, and I definitely see the rhyming structures today. I can hardly forecast how bullish I am on Ethereum. That doesn't mean I will succeed. So Don't take what I've seen and what I've said today as a tradable perspective. This is just, and that's the reason why I've made this, because the current perspective and plans I have for Ethereum, the ones I will put into trades as long as the technical structures correlate to my tradable signals, I will follow these guidelines. And this is pretty much exactly what I have in mind for Ethereum for the weeks and months ahead. Of course, I still tend to believe that 22, 23 will probably offer another massive drop on Ethereum. So don't fall for the hype. When the prices are too high, wait for retracement. And Apple is there to tell you that they always show up. Okay? And just like I think nowadays Apple hegemony is on the verge to terminate, because things never stay forever. And pretty much prices, when they go way up, will go way down. And like I think nowadays Apple is on the verge to terminate this big, massive revolution. They've been the leaders. I think Ethereum is on the verge to be one, hopefully. That being said, I wish you guys a pleasant day. Remember that you never trade IDs. IDs are their mountain projections at best, and that's all they are. Trade the patterns you know, trade the strategy you master, and just try to make fit of your IDs to these plans. And as long as they do follow accordingly, just trade accordingly. That's exactly the mindset I'm currently into. As long as I'm not proven wrong, I'm going to keep playing that game. Bye, guys.